Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Shah and you're watching Indian Open. Let's go straight to the headlines. Donald Trump finally sets a date for higher tariffs to kick in on Chinese imports worth $200 billion, threatens to expand the list if China retaliates. The government uses the alternative mechanism route to announce a three-way merger of Bank of Baroda, Vijaya Bank and Dena Bank. The SEBI board meets today to discuss some crucial issues which include relaxation in FPI norms and lower mutual fund costs. Jaguar Land Rover cuts production at one of its plants in UK as continuing headwinds hurt the British car industry. Frankly, a lot of car makers in that region have made noises about Brexit and costs, and the two coupled together and the impact that it could have on jobs and the industry. Anyways, we'll talk about that a bit later on the show. Firstly, the news around the world. I think the trade spat continues. If we were cheering last week that there are talks which are firmly on the table from both sides, somehow the developments over the weekend and in trade yesterday have kind of put a bit of a cloud around that, because Donald Trump has threatened to expand the list if China were to retaliate. And China has, of course, said that they'll go ahead, cancel the talks. Remember, over the weekend, they've spoken about this, that they'll cancel the talks as well. So tariffs of about $200 billion from September 24th. This is in the offing. And let's see, for now, it doesn't have a big impact on the Asian markets, but it's certainly something that did impact the US markets when the news came out, because stocks were pressured on the fresh trade fears. The dollar dipped. Base metals came off as well, as trade war angst spurred concerns about demand. So all of that at times has an impact which we can't measure. At times the markets react in a very different way. But by and large, the central point being that if indeed this trade spat were to get uglier, then equity markets and asset classes by and large will not take it really well. So that was the picture of the US markets. The Asian markets, mixed bag really. Nikkei about 1% higher. Shanghai is up about 0.5% as well. We had some pressure points in trade yesterday, and that might just continue to weigh in on our markets, because the SGX Nifty indicates that we'll start off marginally lower. Remember, in yesterday's session, the large cap indices closed at the lowest point of the day. It was a low volume day, yes, more so for the cash markets, but we closed in at the lowest point of the day. And there were some fresh short positions on the Nifty Bank. In the September series, the OI is up about 4.5%. Not so much for the Nifty, but the Nifty Bank in particular certainly reacted. And what we've seen is that the heavyweight stocks are correcting. Now, yesterday, we were talking about this on the Countdown show as well, that the HDFC companies are getting smacked. Forget HDFC Bank, which is circa 2000, but HDFC Life Insurance, HDFC AMC, all of these stocks have corrected quite significantly the last few days. Curiously, though, if you look at the delivery percentages over the last three sessions, which is Wednesday's session, then Thursday was a holiday, so therefore September 12th, September 14th, which is Friday, and September 17th, which is yesterday, the delivery volumes for each of these names are picking up. More so for life insurance. Yesterday the volumes were much higher, but the delivery percentage is also higher. Certainly seems to be the case that now some hands are getting into these names. Stronger hands are getting into HDFC Life, HDFC AMC, arguably even HDFC. So watch out for these. There's a fair bit of course correction that has happened for a lot of strong names, including the HDFC family. Could be interesting ones to monitor. What will be interesting to monitor today will be a couple of things. So firstly, the PSU banking stocks, by and large, could be active today because of the merger announcement of 3 PSU banks. And we'll talk about the importance of not just these 3, but the others as well. And ICRA has cut IIFL Financial Services to a D rating. And now this could set the cat amongst the pigeons. Again, something that is not measurable immediately from a stock perspective, because a couple of stocks really don't matter. They're not that well owned. But the implications that this has for the holders, the AMC companies which hold some of the paper as well, and what if the repayment were not to happen? So this is a very big announcement, really. It just got dwarfed in the announcements of the PSU banks in trade yesterday. And frankly, if you look at stocks to monitor, there are a clutch of names, but I think the most important ones to monitor would be these 3 names, which is BOB, Vijaya Bank and Dena Bank. The belief is that BOB and Vijaya Bank might have a rough ride today. Because they are relatively stronger banks getting merged with a relatively weaker bank, which is Dena Bank, albeit very small. So the belief in the markets was that Dena Bank as a stock might show a bit of a positive reaction today. So just keep those things at the back of your mind. But that's really how we start off first word today, the three-way merger. Great news for Dena Bank, as I said, but BOB and Vijaya Bank might take a hit, at least in the short term. We'll take you through the financials of the merged entity and what brokerages have to say for each of these and the PSU banking space at large. There is a lot to deliberate on when the SEBI board meets today. Sajid Mangat will join in to give us a glimpse of what's all in the offing. City gas distribution has come of age in India, and the last auction will show how and why. And lastly, Hexaware, which seems to have missed the bus as far as the recent IT outperformance is concerned. Agam Vakil will join in to tell us what could have weighed in on Hexaware. However, the big news of the day, another banking behemoth in the making. The government has proposed merging Bank of Baroda, Vijaya Bank and Dena Bank in line with its stated objective of consolidating state-owned lenders. First, let's get in Vishwanath Nair, who reports on the proposed plan and the possible pros and cons.
In a big move towards dealing with the stress in the banking sector, the government has decided that three public sector banks, which is Dena Bank, Vijaya Bank and Bank of Baroda, will be merged to create an amalgamated banking entity. The expectation is that this amalgamated entity would be the third largest bank in the country and would have a significant presence across the country, as well as a large employee base that will work with all the customers of each individual bank. Now, this proposal will go to the respective boards of all these three banks, and all three boards will come back with a scheme of amalgamation, which would then lead to the process of the merger. Remember that this process will take some time, because each bank's board will have to consider the benefits and the cons of such a merger taking place within the banking sector. The government in its comments has said that none of the employees or the customers of any of these banks will be impacted by this merger at all, and that there won't be any retrenchment of employees. And remember that this is an important point whenever the question of consolidation in the banking sector comes up, because ideally typically there are situations where bank mergers lead to some kind of retrenchments, some kind of resignations, as well as removals of employees wherever banks feel that there is no optimum level of benefit that is being derived for the bank. Typically, whenever such a merger conversation takes place, a question is also raised about the health of the amalgamated entity. Remember that Dena Bank is one of the weakest banks in the banking sector, with a gross NPA ratio of over 22%, nearly 23% in fact, and a very low capital base. It is also under the prompt corrective action of the Reserve Bank of India, which means that it cannot lend out any fresh loans to any of its customers. So this becomes an important point of contention as to what Dena Bank will contribute to the final amalgamated entity. Now, experts that have spoken to Bloomberg Quint say that because of the small size of Dena Bank, the amalgamated entity will not be impacted much by the NPA as well as capital issues. In fact, the amalgamated entity will have a healthy capital base and will be able to grow in the coming few years. The last big merger that took place in the banking sector was the SBI merger, which started back in 2017. That was when 5 of the associate banks of State Bank of India, as well as Bharatiya Mahila Bank, were merged with the parent entity. That merger, while it took some time, it did not lead to any major disruptions in the way the bank functioned. So most of the experts are taking some comfort from that experience and saying that this current merger that is being talked about will not lead to any major disruptions, but will lead to actually benefiting the banks as well as its customers.
Well, thanks for that, Vishy. And let's wait and watch how this takes shape and form. Remember, the Employees Association of the PSU banks or banks at large have said that what's the need? I mean, they had released a letter stating all of this as well. And we'll get to know there are enough and more challenges that lie between now and when the merger does happen, if it were to happen. But let's take stock of what it means for each of these banks as well as for the PSU banking space at large, because many would consider this to be the template now, Shraddha, that get two strong banks or one large strong bank with a weak bank, and then people will try and figure out what happens to each of these based on the ratios that exist, the NPLs, etc., right, so on and so forth. let's first talk about the announcement yesterday. What does it mean for the three banks involved?
I think, Neeraj, rather than two banks, too strong plus 1 week, it seems more like a case of one big strong bank which had to bail out the smaller, weaker bank, Dena Bank, and then they also threw in Vijaya Bank just to sort of offset the impact, the big negative impact that Dena Bank merger would actually have. But yes, overall, this is going to create the third largest entity. So overall, the merged or amalgamated entity will be able to overtake PNB now. So it will be the third largest bank in India after SBI and HDFC Bank. So the merged entity, if you look at the comparison between India's top three banks, the merged entity will be comparable to HDFC in terms of the total business size. They will, however, have a higher deposit base than HDFC Bank, double the number of branches, lower number of employees, but of course with higher NPAs and lower capital ratios. Overall, clearly Dena Bank seems to be the absolute winner because they're grappling with gross NPAs in excess of 22%, accumulated losses of 10,500 crores over the past two fiscal years. And they were in dire need of capital. So clearly they are going to be the biggest winners and shares are expected to react positively today. However, when it comes to the three, we have somebody joining.
Yeah, Shraddha. So let's talk about the other two banks as well. But since you were talking about Dena Bank, I think it's pertinent to get into the phone line. Mr. Ramesh Singh, he's the Executive Director at Dena Bank, joins us on the show. Mr. Singh, good having you. Thanks so much for joining in.
Yeah, good morning. Good morning.
Well, the consensus view seems to be that this merger is a net positive for the industry at large and for Dena Bank as well, because for various reasons Dena Bank was grappling with a host of issues. Now that the merger will create a combined powerful entity, it's great for the shareholders as well as the stakeholders of Dena Bank. How would you react to this?
Certainly, you're right. It is a good move by the government of India, particularly very positive from the banking industry as a whole. Not only Dena Bank, but entire customer base of all the three banks. As well as across India, the people will be getting good advantage of the good synergy between the Bank of Baroda, Vijaya Bank and Dena Bank.
How would this move ahead, sir? I mean, again, as I said, while yes, it is great for the industry at large, for Dena Bank, because considering the three banks that are in the merger offering right now, on a financials, on the NPL basis, Dena Bank, because of the last 12 months and the numbers that have come out, was slightly on a weaker footing. So net-net, it's a bigger positive for Dena Bank?
Yes, certainly bigger positive for Dena Bank as the figures could be seen. But it's not so that only because we have been reading through the news items and all. It's a bailout package for Dena Bank, but it's not so. It is a conscious decision taken by the government of India to make a third largest bank of the country, which can stand, which can extend the good credit to all the people across India. Because see, we are very strong. Dena Bank is very strong in Gujarat and Maharashtra, and so also in Chhattisgarh. Vijaya Bank very strong in South. So all the three banks put together will be getting good services for our customers.
Sir, very good morning. Thank you for joining us. This is Shraddha. Do you overall, a lot of people have to say that this, it's not Dena Bank, but the bigger bank, Bank of Baroda, which will probably have a larger say in the amalgamated entity, especially even when it comes to the likes of the MD and CEO for the amalgamated entity. In all likelihood, it is going to be from Bank of Baroda and not Dena Bank. I just wanted to understand what this will actually mean for Dena Bank and the minority shareholders.
Ma'am, especially let me just inform, it is not the Bank of Baroda's board who will be, appointing MD. It is the government of India who is going to appoint the MD for each public sector bank. So, Krishna, who will be the MD? Naturally, Bank of Baroda being the biggest partner in this, they will be having some upper hand in various policy measures and all. So, naturally, Bank of Baroda MD would be the MD in this case.
So when is the next board meet likely to be to consider this proposal, and is there any timeline for the merger that has been given or said by the government?
Basically all the three banks board have to meet first and get the approval of the board for this consolidation. And in all likelihood within next 8 to 10 days time it should be over. And then from that I think it should not take more than 3 to 6 months to have the merger completed.
Mr. Singh, the last merger that's happened, which is SBI and the subsidiaries, the ratios were in line with the market price the previous day. Would you reckon the same yardstick would be used for this swap as well?
That will be decided in due course because
But what do you think, Mr. Singh? What do you think would be the likely course of action?
See, it is all decided by. We are not decided about the swap ratio and all the things. That will be decided in the due course of time. It will be premature, quite premature to speak about all those things now.
Okay. Would it be also premature to just hazard a guess and to what would happen? One thing that people believe would be an operational challenge in the combined entity, which would be manpower management and cost rationalization or branch rationalization, because the combined entity does have about 9,500 branches, 85,000 employees, which might not be necessary for the size that the bank would have.
If you know the statement made by our Honorable Finance Minister and so also by Finance Secretary, Mr. Rajiv Kumar, it is very categorically told that staff will be there will not be any retrenchment or any kind of such things which market is anticipating, or it may be the people will be anticipating.
Right.
And the second, please.
So please go on.
Yeah, and as such, it's a mammoth bank where definitely these many people will be required. And if you see the merger taken place of the State Bank Associates and all, there was no such case where retrenchment has taken place. People will be absorbed.
Fair enough. Sir, and fair to assume that Dena Bank will be obviously shedding the PCA tag under the merged entity umbrella?
Merged entity once comes into existence, there is no question of this PCA tag. The bank will be the strongest bank at that point of time. Presently, because we are under PCA, it is for Reserve Bank of India to take a call whether to remove this tag or not, as of now.
Okay, Mr. Singh, we'll leave it at that. Thanks so much for taking the time out and being with us. Well, that's Dena Bank talking about the merged entity. Well, little really details, but can't blame him. Anyway, Shraddha, very quickly, we've discussed what happens to Dena Bank. What about the other two banks? What are the brokerages saying?
Right. Neeraj, overall, while there is a belief that, there could be some benefits from the rationalization of costs, given the overlap between the ATM and branches between Dena and Bank of Baroda in Gujarat, the analysts are not really expecting too much of synergies otherwise. Key things that some of the brokerages have highlighted, CLSA says that the merger does not dilute its Bank of Baroda's asset quality, CASA or capitalization. The risk, of course, they highlight is being the cleanup of these banks. Even after SBI merged associate banks with itself, you saw a big uptick in the gross NPA ratio. So that's the big risk that analysts see, cleanup of books, especially when it comes to Dena Bank. JP Morgan says that this is an incremental positive for the sector overall, but the immediate share price reaction should be negative for Bank of Baroda. And they believe that the additional provisioning requirements will also be negative for incremental earnings outlook for Bank of Baroda. PNB, Bank of India and Canada, they believe are possible aggregators, and they also see a probability of SBI being roped in for a second round even after the subsidiary mergers. UBS has said that the big overhang of the worst combination is behind, and they don't see any major impact over the medium term, but they do say that there could be a near-term negative if the swap ratio does not factor in the differences between the operating parameters and capital ratios of these banks. And finally, interesting comments coming in from IDFC. They said that that the integration issues and higher NPLs post merger are their key concerns, and they are the only ones which have actually revised the target price downwards on Bank of Baroda, and they've also from 180 to 130. That's a sharp cut. And Phillip Capital, on the other hand, has said that they've done certain possible scenario analysis, and according to them, the impact on Bank of Baroda's adjusted book on average is about 20%. So that's a lot as well. These two brokerages have highlighted a negative impact on Bank of Baroda, whereas the larger belief is that it's good over the long run.
Well, let's ask Saswata Guha, Director at Financial Institutions at Fitch Ratings. He joins us on the show as well. Saswata, good morning. Thanks so much for joining in. Your initial reaction, this was long anticipated, and it's probably followed script. A large, strong bank, maybe a mid-sized, relatively stronger bank with a weak bank.
Yes, thank you and good morning. I mean, it was certainly expected, and we obviously were in favor of consolidation in the current, given our current banking structure. What did take me a bit by surprise is that, we weren't expecting this to happen now, given that we're perhaps looking at elections in the next couple of months. But nonetheless, I think it in a way shows the commitment of the government towards pushing one of these. This was a key part of the overall 7-point reform agenda, and I think this in a way helps kickstart the process, which I believe the government will hopefully continue, in the future.
Saswata, does this really change your view on any of the 3 banks that were named yesterday, or the overall public sector bank space in general?
Right. Well, see, I think, for the longest time, we held the view that the system the way it's currently structured is highly inefficient. And particularly, we were referring to the PSU banks, where there are, so many of them, where essentially, there's always, and given the experience that has been for the last 4 to 5 years, clearly those inefficiencies have come to light. So obviously, I think for a growing economy like India, where presumably our, credit to GDP is only likely to grow, we need certain large banks, large pillar banks who could obviously shoulder that extra burden and supported by a network of ancillary banks. If you see some of the most stable banking systems in the region, that's how most banking systems are also structured. So in that context, I think it's certainly a move in the right direction. The point at the end of the day, I think the important point to remember here is that when such a step is taken, it's a big step, and therefore it requires a full commitment of all stakeholders. So I think some of the challenges that I've been hearing since yesterday, I think those are to a large extent well-founded. But at the end of the day, if you are able to create a bank which is more efficient than what they currently stand individually, then I think it's good in the long run. Perhaps it will have some short-term pains, but I think you will find that in any reform process.
Saswata, do you expect further similar announcements to come in with respect to more mergers, or do you believe that there aren't any large, strong banks which can actually absorb these smaller, stressed banks? And on the other hand, do you also see the timing of this announcement coming in as a surprise, given that the banks are currently trying to deal with cleaning up their books and this entire recovery and resolution process? Does the timing take you by surprise?
Yeah, see, like I said, I mean, the time took me by surprise because less by the fact that, whether there are equivalent banks, other banks in the system, but more by the fact that, because these are essentially government banks and it requires a certain degree of political will. And usually, when the political establishment is getting into an election mode, usually imperatives change. But I think it was in a way a positive surprise in a manner of speaking. I think, those are fair ones. I think I do expect to see further announcements, but I don't expect to see that perhaps in any time in the near or short term. I think to a large extent, my view is that the government will probably use this as a test case, try and learn out of the experiences from this merger. Of course, they already have, the SBI merger to fall back upon, but that was slightly different because ultimately they were all part of the SBI umbrella. Here, the cultures, you're essentially looking at merging cultures, and which, in my opinion, is one of the biggest challenges of merging state-owned banks. So I think in that respect, I do expect to see some more, but not immediately. And finally, coming to your question on whether we see other banks in a position, well, maybe not immediately, because yes, you're right that there are certain other large banks which continue to grapple with problems of their own. But the fact that it's happening now, in a way, to me indicates that perhaps bulk of the legacy issues are behind the banks. Of course, there will be some new issues, but I think it sort of conveys that message in an implied way.
Well, let's certainly hope so, that the worst of the issues are behind, if not anything else. But Saswata, thank you so much for taking the time out this early in the morning and talking to us. Appreciate it. Well, that's the view from Fitch Ratings, Saswata Guha. And well, that's a complete lowdown on what's happened with the PSU banking space. A couple of other, Shraddha, thanks for joining in as well. A couple of other things that we need to discuss. On first word, SEBI board members have a lot on their plate. The 9 members are expected to take up some crucial issues, including relaxing FPI investment norms when they meet this afternoon. Sajid Mangat reports on what's on the agenda.
The board of SEBI will meet today to mull on a various number of decisions. Among them would be relaxing the foreign ownership rules. This is something which has been bugging the market, and the HR Khan committee report has also spoken about relaxation of these rules, so the board will be deciding on that. Aside of this, the board will also be looking at the TK Viswanathan committee report, especially with respect to seeking powers to intercept phone calls and for surveillance enhancement. There's not much expected there except for the fact that SEBI may ask government of India to allow that relaxation. Over and above that, the SEBI board will also look at the committee report on insider trading regulation, where the entire scope of insider trading is being increased or a little bit diluted so that it doesn't become onerous on some of the companies. It is also going to look at the enforcement of the NACL probe, how the brokerages, what is the end result of it in terms of actions taken against brokerages and the ongoing case. So the board will be apprised about the updates on that case. Aside of that, the SEBI board will also look at mutual fund expenses. This is something which the committee, subcommittee of Mutual Fund Advisory Committee met, and they recommended some of the guidelines with respect to reducing of expenses as and linking it to performance and the average AUM of the fund size. That's something which is expected from SEBI's board meeting. Aside of that, Justice Dave committee report, which talks about expanding the scope of consent, especially with respect to including fraud within the consent, especially FUTP, which is fraudulent and unfair trade practices, and going ahead with consent with confidentiality so that it cannot be revealed going forward. So these are some of the recommendations which the board of SEBI will be mulling, and the decision will be expected post market hours.
Well, yeah, an important one. So on two counts, Sajid, thanks for putting that into perspective. One from the FPI route, and I think the tensions are there have eased, but SEBI's decision would be important. And on the mutual front as well, the cost bit, and I think we'll get you some updates on what the announcements mean for all you mutual fund investors as well when the decisions do come out. The last piece on First Word today, the Petroleum and Natural Gas Regulatory Board awarded 84 city gas distribution licenses through the largest ever auction. The ninth and the latest round attracted more than 400 bids, amounting to an investment of about 70,000 crores, Samit Sarkar joins in with the details. Now, Samit, how successful was the process? Who were the winners?
Well, the ninth round of city gas auction has been completed and it was very successful. Now, the reason why I'm saying it was very successful, as you can see in this chart, so far there were only 91 areas under the ambit of city gas distribution company, but in this round alone 84 areas were awarded, and that's the reason why it was a success. Now, more than 400 bids had come in for these 86 areas, and investment worth close to 70,000 crore has been committed for these 86 areas, but this will come in a process of time and not in 1 year. So that's there. But then it was a good success for this. Now, who won these areas? Now, most of the areas were awarded to private companies. They won around 40 areas, while 35 areas were awarded to public sector companies, and 9 of them were awarded to the joint ventures between the public sector and private companies. Now, the companies that won the most and stood out the most were the 2 oil marketing companies and 2 private companies. Now, Adani Gas topped the chart with winning 13 areas, followed by Bharat Gas Resource. This is the 100 wholly owned subsidiary of BPCL, which won around 11 areas. Now, Adani Gas, along with this 13 areas, its joint venture with Indian Oil Corporation also won 9 areas. And Indian Oil Corporation on a standalone basis won 7 areas in this 9th round of city gas auction. Sudhir Mehta-led Torrent Group, that is a Torrent Gas Company, won around 10 areas, while GAIL also stood out in this quarter. Its wholly owned subsidiary GAIL Gas on a standalone basis won 5 areas, while its joint venture and associate companies won an additional 9 areas. Now, in Indraprastha Gas Limited, HPCL and Gujarat Gas, now these was kind of disappointments, and the reason why I'm saying it was a disappointment was because they had put in bids for at least more than 10 areas. IGL had put in bids for around 11 areas, while HPCL and Gujarat Gas had put in bids for more than 20 areas, but they still won only 1 area each. Other than this, Petronet, LNG and Mahanagar Gas had also put in bids, but they did not win any areas. Petronet had put in bid for 7 areas, but they did not win any area in this 9th round of city gas auction, while Mahanagar Gas had put in bid for 3 areas, and they also did not win any areas in this round. Now, how does it benefit? Well, for city gas distribution company, it expands their revenue stream, but for oil marketing companies, it gives them much required diversification from the refining and the marketing business, and also helps them to tap the future revenue that could have been lost. That is, consumers choosing cheaper PNG and CNG over the costlier LPG or petrol and diesel. So that's how it works out, and that's how the 9th round of city gas auction has panned out.
Well, interesting. At least in the number terms, you have the winners as well. I'm sure a lot will be discussed about how soon these projects start paying back to these winners. And we'll talk about all of that during the course of the year. But Samit, thanks for putting that into perspective. That's all that we have on First Word today, but lots more lined up on Indian Open. We get in Nischal Maheswari of Centrum Broking to talk about how are they looking at the markets currently and what are the key names to monitor. Some relief in sight for thermal power producers in Gujarat as there is a proposal to revise tariffs under the power purchase agreements. We speak with Praveer Sinha of Tata Power. But after this break, a full tilt towards the day's trade.
Good news, got a promotion and a damn good raise.
Congrats बेटा।
वाह, रेज अब तो इंश्योरेंस पॉलिसी ले ले।
कौन सी कंपनी से लूं?
चूज वही जिस पर हो पूरा भरोसा।
That's good, but आज की generation wants everything online. Easy premium payment options, loan facilities और wide range of products.
पापा दीदी, I will decide. Just send your links now. तुम दोनों भी ना, same choice. LIC.
LIC, trending with times. 62 सालों से हर generation की पसंद।
Dreamers. They're everywhere. You've met them, been to school with them, worked with them. They didn't seem different. Yet she's the one who surprised everybody. His crazy idea actually worked.
They are no different. They are you. When you take a chance on yourself.
These are the dreamers who found a way to run the engine of the world. These are the entrepreneurs. There is no formula. There is no right place, right time. There are no overnight successes.
But there is toil, there is preparation, and there is tenacity.
There is no end of the road, no obstacle large enough. There's just the vision and the heart that won't give up.
Because Agons of business never stop.
Agons of business never stop. Only on Bloomberg Quint.
Hi, I'm Jatin Khimani. I'll be at Investors Carnival this year talking about the art of selling stocks. Watch me on Bloomberg Quint.
Good morning and welcome back. You're watching Indian Open right here on Bloomberg Quint. A quick check on what's been happening across Asia. Before we take you through the futures and options cues for the setup of our markets. So more mixed bag for Asia, with the Nikkei 225 trading 1% higher, Shanghai trading flat to moderately in the green, and the Hang Seng trading under by closer to 1%. Remember, Hang Seng has been seeing a bleed over the last 2 or 3 trading sessions, and it's no different today. But this is on the back of what's been happening in the US. So a slightly divergent move. US ended the day in the red across the board. You had cuts of closer to about 0.5% to 1.5% on the Nasdaq on the back of technology shares leading the drag and more tariff concerns. SGX Nifty now, before we take a check of the futures and options space, indicating a slower start, 11,375 at last count. Our markets yesterday fared poorly towards the end of the trading session, though you did have a slight pickup in the advances and declines ratio, but still no headroom there, with Reliance bringing down the index. Agam is joining in right now to tell us exactly what happened in terms of the kind of build-up that we've been seeing on the indices.
Right, so we did see more weakness yesterday, and that was very evident in the futures and options space. Let's pull them up right now, and as you can see, we've seen unwinding in the Nifty futures, where the open interest has declined by around 1%, going to the Nifty banking futures. That's where we've seen more shorts building up, even as we see the underlying decline by around 1.3%, but 4.5% added in open interest. Let's move on and take a look at the other variables. And well, the India VIX has inched back up, back to the mark around 14.5, up 4.7%. And let's take a look at how we've seen the changes in open interest. And as you can see, the most active options were the 11,400, 500 and 600 calls, where we saw more writing, considering we saw the Nifty come off further, and unwinding in the same puts. But what does it mean when it comes to your put call ratio? That naturally also is lower to around 1.28. But let's talk about your stocks then, and we do have Adani Enterprises which moves back into the F&O band. On the other hand, we have Balram Chini moving out of the band. Watch out for this one. Even as it moved up by around 8%, we're likely to see further up move, considering, and especially now that it is out of the band. Orchid Financial Services stands out. We saw fresh longs there. Let's take a look at the next one. There you have it. It's Engineers India, fresh longs there as well. And the next one is ICICI Prudentials, where the stock declined by around 4.5%, and open interest will increase by around 10-11%. Manappuram Finance similarly did see fresh shorts moving in. So mixed cues coming in. Yes, we did see the benchmark indices come off, but can we see some respite today? Let's wait and watch.
All right, Agam, thanks very much for that. So Balrampur Chini, yes, is interesting because it missed out on the big move that the rest of the sugar pack had because of the fact that it was in the ban period. So while the rest of the sugar pack was all locked up on upper circuit, Balrampur Chini saw just an 8% move on the upside. So you could see a trickle in of that coming in to today's session as well. But let's go across and get some market opinion. Gaurang Shah, Head Investment Strategist at Geojit Financial Services, is joining us on the show this morning. Gaurang, good morning to you. And I'm going to straight go and talk about the biggest news that we've seen since yesterday. And that's the merger of the 3 banks, the Bank of Baroda, Vijaya Bank and Dena Bank. What's your take on this, and how do you think these stocks are going to react individually?
Morning to all of you all. I think it's an announcement made formally, Devina, and more importantly, it's going to be a weight in terms of what the valuation and swap ratio might work out. So instead of jumping the gun, I would say that let us wait out and see. On the back of the envelope, since we have a coverage on Bank of Baroda, the recovery process may get a little bit slower given the merger and the NPA, elevated NPA, if you will, especially for Dena Bank, close to about 11%, and for Vijaya Bank, I think it is close to about 4.5%. That might create a little bit of hurdle, but remains to be seen with respect to the valuation and swap ratio, how the numbers work out, and whether it is favorable for shareholders of Bank of Baroda and Vijaya Bank, or whether it is favorable for shareholders of Dena Bank and Vijaya Bank minus Bank of Baroda. It's a wait and watch. But I think, honestly speaking, I think this step taken by the government was much before than what we as a brokerage house had estimated after the announcement by the Honorable Finance Minister for merging 21 listed PSU banks. But again, I think it's a formal announcement. What we need to wait for is the numbers.
Sorry, no, I'm just saying would be interesting only because after quarters and quarters of talking about how PS Jayakumar, after talking about how BOB will finally see the light at the end of the tunnel, it almost seemed like they are there, at least in the last conversations that he had with this. And now it's saddled with this. Even if the numbers don't materially change, the mind space of the management that goes into managing a large merged entity, 85,000 employees, some 9,500 branches.
That's what many are saying. The timing of this is so wrong because the banking sector is under so much of stress with regards to the balance sheet and the cleanup of the balance sheet. So instead of the top management focusing on actually cleaning up the balance sheet, now they have to divert their attention and make sure that this amalgamated entity comes together, as one big machine which can work cohesively. So, I mean...
So BOB might be under pressure. I think Gaurang's point is well taken. Let's wait and watch if there is further pressure during the course as well. However, the quarter 2 numbers might look okay.
But actually that might not also be bad because I was reading somewhere that the process of getting these 3 entities together may not be that bad because they are under the same core banking system, which is the Finacle from Infosys. So the whole system and the whole way of working and the software that they use is not different. They all use the same one. So to get it together probably may not be as big a task as probably, but obviously the number of employees that they have, the branches that they'll come to, it will be a bit.
Yeah, let's wait and watch what happens here. And this is the big piece of news. Before we move on to the other pieces of news as well, I think our research team is waiting. So let's go across to them and get a lowdown of all the other key stocks in news and then, of course, getting Gaurang's opinion on them. So Shraddha as well as Agam to talk about the key stocks in news. And I think the takeaways from HUL and whether they were positive or no. So both of you, good morning, and Shraddha, good morning yet again. But aside of the banking names, what are the stocks in news today?
So Neeraj, Tata Motors could possibly be in focus. JLR has cut the production schedule at its UK plant citing Brexit concerns. So that could continue to weigh on Tata Motors. You have McLeod Russell, which will dispose 2 of its tea estates for a net of about 90 odd crores. These 2 estates contributed very marginally to the total turnover, just about 3 or 4%. But it's an additional inflow of 90 crores that will come in for McLeod Russell. Orient Pro Solutions, not a very liquid counter, but they will provide cash management platform to a Sudan-based bank, and it could possibly react positively to this contract win. And finally, Lakshmi Vilas Bank, where the ET report says that Aeon Capital Partners has joined the race to buy up to 30% stake. The bank, of course, is likely to use this for growth capital and also to bump up its capital adequacy ratio, which had fallen below 10%. So ongoing developments that we've been hearing about for Lakshmi Vilas Bank could possibly react to this news.
Okay, let's wait and watch. What about HUL, Agam? What are the key takeaways?
Well, the outlook remains positive and demand remains strong according to the management, which has met a lot of analysts. And according to a lot of analysts, there is a suggestion that we're likely to see 7 to 8% volumes growth for the second quarter. And the company has also undertaken price hikes worth around 3 to 4%. This is largely in the home care segment. And this should be adequate to compensate for the raw materials inflation that the company has seen in the recent times. It's essentially in the home care segment, and the home care segment has seen the most amount of pressure due to the Indian rupee depreciation, considering a lot of these ingredients have to be imported. That says there's been a very little competitive intensity in the laundry segment, especially from the likes of Jyoti Labs or, for that matter, Procter & Gamble. And the company also says that, despite hikes, prices have still been lower than last year, which means that it's indicating to a certain extent that there is more scope for price hikes later on in the year. Whether or not that comes about is a question, but for now, a lot of these brokerages remain positive on HUL on the back of that consistency in volume and pricing.
Hey, Agam, thanks for putting that into perspective. Gaurang, are you bullish on HUL? The stocks have come off a little bit, but punchy valuations still exist. What do you do here?
Morning. Now, when we started the year 2018, I think HUL was close to about 1,000 rupees or 1,100 rupees. And the last quarter this financial year, that is first quarter this financial year, and the last quarter of last financial year, we've seen significant improvement in terms of volume growth, especially for the first quarter this financial year, I think close to about double digit, high double digit. And that's what has kept us excited as far as HUL is concerned. And I think there are close to about 7-8 odd names in the entire FMCG space, consumption space, that we are extremely positive on. I wouldn't be surprised the stock crossing over 2100, 2150 on fallback of demand, especially from the semi-urban and rural India, and of course the kind of foray that they have made into herbal and Ayurveda. And of course they have acquired a company called Ayush as well. So I think the growth trajectory looks perfectly laid out well, and I don't think that they will have any difficulty in terms of meeting up with their business strategy and the numbers that they want to achieve.
All right, that's HUL there, 1605 on the counter. Yesterday's session seen a little bit of a dip that came in, but nonetheless, it's the entire pack which has been seeing a little bit of pressure and a valuation correction that's coming in, barring actually just one stock, which is a Dabur, but we'll get to that in a bit. Let's focus on what's more topical right now, which is the big three-bank merger. We've got Mr. Sankara Narayanan, the MD and CEO of Vijaya Bank, who's joining us on the phone line right now. So thanks very much for taking out the time. Was this expected at your end? And secondly, this particular merger coming at this particular time, what is the community believing, and what's your sense on this, and how have you taken it in terms of the overall way forward?
As far as the merger and stronger bank concepts, last 1 year government has been talking about that, and we during month end also the discussions were on the combined entity will be much better for the country's economic growth as well as credit growth. On that aspect, we have absolutely no surprises in this announcement by the government. Only the combinations, when they informed yesterday evening, we came to know that Baroda, Vijaya and Dena are joining hands together. And definitely it's a good progressive step, and the combined entity will become the third largest bank in Indian operations, and this will definitely give a better growth both on deposits and also on credit in the best interest of the country, which will add definite value to the economic growth. And I'm very confident and optimistic the decisions will be accepted by all the three banks board. And of course, the process is may take around 4 to 6 months. To start with, the issue will be taken to the board for approval. Then the integration of various segments will happen in stages. And definitely this is a welcome move and we are for it.
So you said that you just got to know yesterday about the names of the three banks that will be merged, though obviously this has been in the talks. So, in your sense, obviously, the market is anticipating that BOB and Vijaya Bank are the two stronger names in this mix, and Dena Bank probably could be a little bit of a drag. What's your view on that?
No bank is a drag actually. See, whatever issues of NPA in a particular bank, it is probably due to various factors. Various factors in the sense maybe policies, maybe licenses, maybe the exposures on some infrastructure groups might have failed for time being. Definitely it's all getting resolved through NCLTs, recoveries and other things which are happening quite positively across banking sector. And a bank which is in existence for 80 to 100 years, if it is under PCA and not accepting either deposits nor lending, that serves no purpose at all. At least by the combined entity, if the resources and the infrastructures are effectively put into use, that will make more business sense for the country. I'm not demeaning any bank or any organization.
Right.
It's their bank which is under consolidation. will have the benefits, and the entire banking fraternity will get benefit out of it.
Okay, Mr. Narayanan, yesterday I think the Employees Association released that there might not be too many positives, their view of course, but do you believe this could be a small hurdle? Employees of the Banking Association not quite in sync with the merger?
I can give a simple example.
Yes,
in
please.
nationalized banks, beyond GM level, that's EDs and MDs, they have seamless transfers between banks to bank. For that matter, I moved from Bank of India to Vijaya Bank, and we got settled in a day or so. And the name is only a reference. Yes, we have emotional attachment to the names. But in short, the banking activities in India, the liability products are same, savings, current and fixed deposits. And advances products are also same. Agriculture, SME and retail and corporate. Yes, some banks may be concentrating on corporate, some banks may be very strong in retail like Vijaya Bank. But overall, the setup is same. We, by definitions, we accept deposits for the purpose of lending and investments. That way, the jobs are also transferable from one place to another, one branch to another, one state to another. Yeah. So we get used to it over a period of time.
Right.
So it's only the name that gets merged or changed or whatever it is. Finally, when the work or content is same, I don't see any reason to worry about when particularly the combined entity is going to be one of the strongest banks operating in India.
Right. So just to come, fall back on when the SBI associate banks merged with SBI, they reported a loss in the March quarter of 2016-2017. They reported a loss of over 5,000 crores. For the entire year, they reported a loss of over 10,000 crores. So at least from a one-year perspective, it was weighing down heavy on the kind of numbers that it posted. Do you see the same thing happening here, or you're pretty, on a stronger footing here?
See, on profitability, definitely I'm sure that combined entity will show or record better results for March and also going forward. Yes, there may be that the initial migration process may take some time, but I don't see anything which will impact the business or the profitability. And on standalone basis, Vijaya Bank is doing pretty well, and we will continue to do it. And we will add value to the combined entity in much better way than what it is expected by the market.
Okay, got that. So it's not a worry for you. Thank you, sir, for joining, Mr. Narayanan. Appreciate you taking out the time and clarifying those details for us.
Thanks a lot.
That's management at Vijaya Bank talking about the government announcement of merging Bank of Baroda, Vijaya Bank and Dena Bank as one amalgamated entity. Well, moving on, we'll get across to our technical experts. Hadrien Mendonca, Senior Technical Analyst at IIFL. He's joining us on the show right now. Along with him, Gaurav Bissa, Associate Vice President at LKP Securities, is also joining us on the show. Gentlemen, thanks very much for your time. Let's start off with a call on the index. Gaurav, we'll start off with you.
Good morning. The view for index is mildly bullish. We have seen some pressure mounting around levels of 11,500, 550. Having said that, the immediate support, the previous support also seen around levels of 11,320, 350. If you look at the option chain, decent amount of padding is seen in 11,300, 11,200 put option. 50 DM is also placed around those levels, 11,320, 330. There can be small dip that cannot be ruled out towards the level of 11,340, 350. But I think from there we can see a temporary relief rally coming in towards the level of 11,500, 11,520. I would not term it as a bottom happening in the Nifty index, but yes, a small bounce back cannot be ruled out. A close below 11,320 would mean that we can see another couple of 100 points pressure in the Nifty. As long as we are trading above 11,320, 330, I would be having a mild positive bias in Nifty. One can either buy a 11,500 call option at levels of 40, 45, having a stop loss at 25 and play for targets of 80 to 100 rupees.
Hadrien, good morning. What are your thoughts on the index trade today?
Yeah, good morning, Neeraj. Definitely, the overall view continues, to remain the same, and that's positive. Nothing has changed if you see, the larger time frame charts. But coming down to the lower time frame charts, definitely there has been, a sequence of lower top, lower bottom formation. There is no doubt on the daily charts we are seeing that happening. So for any kind of fresh bullish bias to once again resume, I think there are two important points that Nifty has to take out. So first is 11,530 mark, and second is 11,600 zone. So these are the two immediate lower tops that Nifty has created in the past 1.5 weeks. So I think, in my opinion, that's very important to be taken out if we are going to see any kind of up move from here. Whereas in my opinion, 11,250, the immediate low that we have hit is likely to get retested because of the overall pressure that we are seeing in the short-term smaller time frame charts. As far as the Bank Nifty is concerned, no doubt yesterday, it did not participate as strongly as it was expected to in the fall that we saw in the markets. But I think even the banks are looking weak, and as far as the banks are concerned, 26,700 is an important support zone for the Bank Nifty. If we see a crack below those levels, I think even the banks will start participating in the downfall. So short term, definitely weakness is visible, but overall view continues to remain positive.
All right, gentlemen, just stay on with us. Before we come and take your stock recommendations onto our special segment, Bloomberg Edge, where Jayesh Khilnani tells us about a pattern that the Bloomberg terminal has thrown up on a particular stock or a particular trend that he's picking up. Jayesh, what's the stock today?
Morning, Devina. It's Shriram Transport, and a few factors are playing out incidentally over here. One is that the stock has recently seen a sharp correction from about 1350 odd levels to less than 1200 levels, and it is now trading very close to the previous support area from where it had in fact seen a bounce back. Not only that, but the analyst target price is nearly 40% higher from the current market price, and the stochastic indicator has turned positive with yesterday's close. First, let's have a look at the stochastic indicator and what it actually suggests. It helps you to identify when a price move is overextended, which is what I was telling you, from 1300 plus levels to less than 1200 the stock has reacted, and it measures where the relative position of the stock is in comparison to the recent high or the recent low that the stock has clocked for itself. Now, there are a few conditions that you have to bear in mind. Overbought is above 80 and oversold is below 20. And a crossover between the two lines that get plotted on the stochastic gives you the buy and sell signal depending on the direction of the crossover. Now with that, let's have a look at the chart of Shriram Transport. So that's the sharp downfall that I was referring to, from 1350 odd levels to less than 1200. And you can see that previously in the month of June and early July, the stock actually managed to take support near this area and then bounce sharply towards the 1450 area. Now you can see that and the bottom panel is the stochastic indicator, which shows that the blue line has in fact crossed above the white line, and all of them are above the green line, which means that there is confirmation of a buy signal going ahead.
Okay, Jayesh, thanks a lot for putting that into perspective. So that's the stock, Shriram Transport Finance, on your radar. Specific stocks from our technical experts as well, and derivative expert too, by the way. Gaurav, Bissa, your top recommendations for the morning.
The first recommendation would be Bio and Jindal Steel. It would be more of a positional call. We have seen strong long positions getting built around levels of 225 to 30. It's added almost 7-8% long positions. If you look at the option chain, 230 call option come at a very high concentration. It's now comfortably trading above those levels. A lot of buying is emerging in 240, 250 and higher strike call options as well. It's given a breakout on daily charts and sustaining the breakout levels, multiple breakout levels as seen getting validated. So there's a good chance it can move even 15-20% from here. For next 2 or 3 days, one can play for small target price of 250 and have a stop loss of 32. Second would be buy recommendation on Jubilant Foodworks. We have seen strong correction coming around 10% or so. Some amount of exhaustion was seen in short positions. Yesterday we saw 2% long positions getting built in otherwise weak market. It's bounced back from the immediate support levels of 1340. On hourly charts, double bottom breakout is seen at sustained level of 1360. One can play for targets of 1390 and the stop loss for this would be 1342. The sole sell recommendation would be on Titan Futures. Consistent negativity has been seen in the name. Consistent short positions are seen getting built in the name. It has given a breakdown on head and shoulder pattern on weekly charts. can even test levels of 750, 760. But for next couple of trading sessions, one can have a stop loss of 836, play for targets of 800.
All right, Hadrien, what about you? You've got 2 calls. Quickly run through them for us.
Yeah, so one is a buy and one is a sell. So first one, the long call is on a DV slab. We are seeing a 2-week consolidation pattern breakout on the daily charts. We have also seen a very impressive delivery-based buying that happened yesterday. So I think DV slab is, merits a buy at these levels. I'm expecting a target of 1400 once again and keeping a stop loss at 1345. The second stock is a sell on Reliance Industries September futures. Now, I really don't want to doubt the head and shoulder pattern breakdown that we have observed on the hourly charts. I think one can sell Reliance Industries for a target of 1182, keeping a stop loss at 1257.
Perfect. All right, so that's the calls coming in from our technical experts. We're about a few seconds from market pre-open. Nifty as well as Sensex up on your screens. Marginal uptick there on the Nifty at 11,379. Sensex also sees an uptick of 236 points. That will cool off. 37,821 is where the Sensex is currently trading at. Aside from that, obviously, you're going to be watching out for some movers and individual stocks. Titan is down further at 809. The stock sees some pressure. M&M, Eicher Motors, you've got Kotak Mahindra Bank, but it will be interesting to actually pull up a Bank of Baroda and the other 2 stocks, that is the Vijaya Bank stock and the Dena Bank stock, to see how the performance has been. So the initial downtick is about 10% for a Bank of Baroda. Vijaya Bank sees an uptick of 20%. That stock's at 71 now, and Dena Bank also an uptick of 20% at 19. So 3 big names, and out of that, Bank of Baroda seems to be like the biggest loser in trade. 121 on the counter, and most of the brokerages also, I think, have started to see a little bit of a downgrade coming in. Their price point of about 120 is exactly what they had spoken of. Other stocks, Bajaj Auto down 0.5%, Tata Motors is down 0.5%, Coal India is down. But more gainers and losers this morning. Bharti Airtel is up 3%, HDFC is up 2%, HUL is up 1%, Bajaj Finance, Bharti Infratel, BPCL and NTPC gain by anywhere between 1 to 0.5%.
Okay, just the currency and the bond yields for a moment before we move on to other stocks. Bring up the rupee at open about 72.59. So flattish moves right now, 72.53 currently. So flattish moves right now. The bond yields, 8.15 or thereabouts, 8.10, yeah. So hardly any moves there as well. But it's all about PSU banks, really. The first few ticks seem to be showing it's all about PSU banks. Vijaya, Corporate, Dena Bank, UCO Bank, United Bank, IOB. All of these names are in the green. And then sugar takes over. So the likes of Bajaj Hindustan, Renuka Sugars, etc. seem to be doing okay for themselves. Any big losers in the first few ticks? Save for maybe Bank of Baroda, and Future Consumer sheds another 5% back to 46 for this stock. So that continues to reel.
Actually, you should see a Balrampur Chini because it moved out of the FNO ban and it missed out on that big run up yesterday, but I don't think it's doing much right now, just about 2.5% or so.
Yeah, well, a large stock, heavy equity has moved on from almost 70 to 98 already. So, well, a fair bit of move there too. Remember, Balrampur also, compared to the others, probably didn't fall as much, but Devina, it seems to be about PSU banks all across, really. Yeah. Well, massive move into all of these names.
And also just the anticipation of who's next.
Yeah, well, maybe that too. The only problem is, and before we get to brokerages, just want to get in a perspective from Gaurang Shah here. Gaurang, I remember 24th October, when the first big announcement for PSU banks came, the stocks rallied 15, 20, 25, 30%, at cases even 50%, and that marked the peak for those names. Could this time around be different for some of the smaller PSU banks? Because all of them are rallying.
See, Neeraj, the problem is that the market participants get overexcited at times. That's what exactly happened when that announcement of 2,11,000 crore was announced, and we saw, PSU banks, at least in my experience that I've been attached with equity markets, I never saw PSU bank stocks rally 30, 40, 50%. For 2 or 3 consecutive days. Exuberance is good, but one has to be realistic in terms of we don't know what the valuation is going to be. We don't know what the valuation is going to be. And here you are, when in pre-open session, you are looking at 20% uptick in stocks like Dena Bank and Vijaya Bank. Now, I would just say hold on to your horses. And likewise, you're seeing the similar rally in some of the weaker stocks which nobody wanted to touch till yesterday. After last evening and the announcement, suddenly, there is this euphoria. And let me say this, I don't think the government will give an unfair deal to the banks within which the weaker banks are going to get merged. We already seen State Bank of India and its associate bank merge. Well, this is a little bit different case. And let me say this also, whichever smaller or mid-size, bad banks with weaker balance sheet get merged with bigger public sector banks, I think the recovery process is going to be equally slower. So don't get overexcited and, jump the gun. Be a little bit careful if you are wanting to buy these stocks either from a short or a medium term point of view. Long term, I can't comment because we don't cover some of the lesser known names, weaker names in the PSU banks, whether they are mid or small banks.
Actually, it's a pertinent point that Gaurang's making, because up until now, everyone spoke about how, the books are not clean of these banks. I mean, they're untouchables. We're not going to invest in them. And a slight bit of news which affects just 3 banks, and the rest of the pack, you see this knee-jerk reaction and this euphoria. For a UCO bank, what is in it for the stock to rise 9%? What is in it for an IOB to rise 9%? Yeah. So, you digest the news, you don't even have the swap ratios yet. It's just the initial shot in the arm that the government has given, and the entire pack is abuzz.
Yeah, well, let's wait and watch what happens at the end of the first 8 minutes as well. Suffice to say, though, if SBI's ratio is to be believed, then it could well be at yesterday's prices. But we'll get to know about it when we get to know about it. Let's get in Somit Sarkar, who's been waiting by with the top brokerage calls for the morning as well. Somit, what do you have for us?
On the big brokerage call for the day, first we have is Kotak Securities on Bajaj Auto. Now the brokerage has maintained its sale rating of the stock but have raised the target price to 2,700 from 2,500. Now according to the brokerage, rupee depreciation will aid the margins for the company as it gets nearly 43% of its revenue from the export market. Now this depreciation in the rupee will not only improve the EBITDA margin but will also make Bajaj Auto more competitive in the export market, according to the brokerage. However, the brokerage has remained cautious on the stock and has retained its sell rating due to the fall in profitability in the domestic motorcycle segment and absence of scooter in the company's product portfolio, which could cap the re-rating for the stock going forward, according to the brokerage. Second, we have is Jubilant Phillip Capital on Jubilant Foodwork. Now the brokerage has maintained its buy rating on the stock with a target price of 1,780, which suggests a potential upside of nearly 32%. Now the brokerage is expecting that Jubilant is poised to deliver a strong second quarter of financial year 2019. Now the channel check suggests that the same-store sales growth for Jubilant Foodwork was 18% plus in the month of July and August 2018, and they're also expecting the September month to be strong for the company because of the shift in the Navratri season. Now the brokerage is expecting a 44% and a 59% rise in Jubilant Foodwork's EBITDA and net profit in second quarter compared to last year on the back of normalized ad spends, a focus on reducing late deliveries, and because of a strong same-store sales growth trend.
Okay. Thanks a lot for that, Somit. So that's essentially the view on these names. As the pre-open rates are settling down, I think BOB clearly emerging as the top loser, down about 10%. So, and it goes in line with what almost everybody was saying. Long-term positive, yes, but short-term negative, and that's clearly weighing in on BOB. The other stock in focus is Avanti Feeds. Just bring that up because it was up about 14% yesterday. Adds another 3% weightage in the session today. Quick thoughts out here, Hadrien. Avanti Feeds as a stock, have you tracked it on the charts?
Yeah, absolutely. I've been tracking it, and yesterday's move is a pretty significant one with huge volume participation. And the good part is here that it has respected the previous low which it hit in mid-July. So I think, there is a double bottom kind of a formation that has been happening in Avanti Feeds. And I think this momentum that we saw yesterday would definitely, move higher from here on. So I think this momentum will continue going forward. On the upside, I think there is a small gap that it created in the previous month, and I think that comes close to 510 levels. I think Avanti Feed is on its way towards the 510, 520 zone.
Okay. Well, let's wait and watch. 510, 520, 480 for an Avanti Feeds right now. Let's see if there is more in store for this one. The other one that is reacted today is Gujarat Gas. Now remember, while the news was known, but there's a reiteration from the management about the nod that they've received for the Narmada district, the gas distribution network. It covers an area of about 2,800 kilometers. That's a shot in the arm for Gujarat Gas for sure. IGL has won something too, but Gujarat Gas, the reiteration makes the stocks react a bit. Gaurang, do you track these gas companies, IGL and Gujarat Gas?
Closely, Neeraj, and all these alternative fuels or clean and green fuels that the government is wanting to give a push, and more, rightly so. On one hand, you have boiling crude oil prices translating into never seen before petrol and diesel per liter price. On the flip side, when you use alternative fuels in your vehicle, the availability is only there in the cities, whether it is metro, tier 1, tier 2 cities. Moment you step outside the periphery of that city, it's very difficult to get these alternative fuels. Now, what I am given to understand is the budgetary allocation has also been put in place. And it only makes sense to give these companies which are associated with clean and green fuels, CNG and LPG, to have an opportunity to, enlarge or spread their geographical reach and footprints. That's when the problem of this availability not being there will be resolved. And I'm quite excited. We have positive coverage on IGL, Petronet LNG, Mahanagar Gas Limited, Reliance Industries, because this is also one company which has shown keen interest in CGD, that is City Gas Distribution. And more importantly, most of these companies have invested in capex in a huge way, especially for a company like Petronet LNG. The way they debottleneck their Kochi facility issues, the way they enhance the capacity in their Dahej facility. And as we go forward, I think the government is also, I wouldn't be surprised if you see huge, push given to these clean green fuel, alternative fuel companies that I have listed down. So we are positive on Gujarat Gas, IGL, Petronet LNG, Reliance Industries as well.
All right, gentlemen, just stay on. We're minutes away from market opening, and we'll tell you all that you need to know to stay ahead in trade today. Let's start off with the top news of the day. The government announces merger of Bank of Baroda, Dena Bank and Vijaya Bank. Analysts see positive tick for Dena Bank, but not so much so for Bank of Baroda and Vijaya Bank.
An update from HUL's analyst meet. The FMCG major has raised prices by 3 to 4% in home care segment to offset raw material inflation in the second quarter.
Jaguar Land Rover of Tata Motors cuts production schedule at its UK plant, citing Brexit concerns.
Tea company McLeod Russell looks to dispose its Bargang tea estate in Assam for 60 crore rupees. It also plans to sell its Harchura estate to Goodrick Group for 32 crore rupees.
And HCL Tech will be in focus today. The company's buyback offer of 4,000 crore rupees opens today and closes on October 3rd. HCL Tech will repurchase 3.6 crore shares at a price of 1,100 rupees.
And in some key brokerage calls, HSBC upgrades Bajaj Auto to a buy. Meanwhile, Kotak Securities maintains a sell call on Bajaj Auto, raises price target to 2,700 rupees from 2,500 rupees. Well, 2.5 minutes left for markets to kickstart trade. As we see, HUL emerges as the top gainer today. Tata Motors, because of that announcement, might have a bit of a dull day, down about 1% because of the JLR announcement. Gaurav, Bissa, a trade on Tata Motors, it's likely to start off as the top loser, albeit only 1% lower though.
Well, if you look at the overall trend, it has not been very weak. It has been finding strong resistance at levels of 275 to 76. On the other hand, there's a strong support that we're seeing at levels of 250 to 52. So any dip towards those levels is a strong buy. I don't think it can fall significantly below 250 levels. One can keep a stop loss of 248 to 50 on the upside. 270 to 75 is what I would be playing for.
All right. Just talk about the sugar pack a bit, though. We've seen most of them up and about by almost 40-45% already in the last few trading sessions. Is there a possible trade here? Gaurav?
As far as sugar stocks are concerned, Balrampur Chini is one that is on my radar. It has a small breakdown below levels of 94.50. I would be a little bit cautious, or I would be a contra player. I would sell below 94.50. I have a stop loss of 96 on the downside. Levels of 88, 89 can be seen. I would be a buyer only if it sustains level of 98, 99. That is the previous high that it made yesterday. As long as trading below those levels, the trend would be a little bit weak.
All right, we've got 1 minute left to go for market opening. Quickly running through top calls from our analyst. Hadrien, let's start off with you.
Yeah, so I'll go with the long on Jindal Steel and Power. I think we are seeing a good consolidation breakout and also sustenance above those important breakout levels. I think one can buy Jindal Steel and Power at these levels, and I'm expecting a target of 246, 248, and keeping a stop loss at 234 on the downside.
Okay, that's Jindal Steel and Power. What about you, Gaurav?
Since we already spoken of JSPL, I think Jubilant Foodworks would be on the radar. We already seen good correction coming up and decent amount of long positions getting built. It can head towards the level of 1400. That would be my topic for today.
Okay, Hadrien, a quick 10-second call on the Nifty Bank. It's likely starting off 0.25% lower.
Yeah, I think the weakness will persist, and I think on the downside it will go ahead and start and take a test around the 26,700 levels on the downside.
Okay.
So that is an important level to watch out for.
Okay, gentlemen, stay on. This is how the markets have started off. We'll just take in opening thought from each of our experts before we thank them. The Nifty Bank, clearly the weakest of the lot. The mid caps and the small caps, I reckon, would have a flat start. Maybe the small caps, which ended in the green yesterday, could be reenacting that move. Let's get the mid cap and the small cap indices up on the screen as well. Well, a bit of green on the screen for the small cap index. Remember, yesterday it closed in the green despite the fact that the large cap indices were down, but it's a very flattish start in the session today. Bring up the heat map and let's see what's moving and what's not. Almost even Stevens, really. Some weakness for Tata Motors, as we said. SBI would be taking on from the belief that the market would have that maybe some of the stronger banks could see some consolidation moves, though SBI has already done its bit, by the way, with subsidiaries. But nevertheless, it's starting off weak. Technology starts off weak. Tech Mahindra, Wipro and TCS are amongst the losers today. What's doing well? HUL, a big move, really 2% higher. So really strong show by HUL in the session today. Dr. Reddy's about 1.25%. Sun Pharma about 1.25%. NTPC, so a bit of a defensive mindset. Adani Ports out there too. So a bit of a defensive mindset on open. But even Stevens, as far as the gainers and the losers go. Just a couple of pockets that I want to highlight on a day when the mid caps and the small caps have started off well. The three names, BOB, Vijaya and Dena Bank, and let's just see what they are up to. BOB 10% lower, Dena Bank 19% higher, Vijaya Bank too about 6% higher, but BOB really being taken to the cleaners right now. This may be it really, but let's wait and watch. We'll talk to our experts about this, but 10% lower for BOB. Just an update on some of the active stocks of trade yesterday. Remember, Monsanto had a big 17% intraday move, up 1% right now. Avanti Feeds starts off about 4%, and Praj, which has had a good run the last few days, starts off about 1.5% lower in the session. Dena, what are you spotting?
It's a trickle effect for all the other PSUs as well, Neeraj, and we've highlighted that in the pre-open session, how the rest of the pack is also a buzz. So you've got the likes of an IOB, which is trading higher by about 15.5%, a United Bank, which is trading up by 10%, UCO Bank, Central Bank of India, Corporation Bank, Andhra Bank, all seeing gains northwards of about 4 or 5%. Amongst the sugar space, you've got a Bajaj Hindustan, I think, which stacks up today in terms of one of the bigger gainers. Then you have an EID Parry, which is up about 2.5%. Arcom is moved up in trade. Avanti Feeds, remember yesterday saw a big move, and today also is up about 4.5%. You've got ILNFS Transport. Remember yesterday's session saw ILNFS Engineering gain almost 14%, so should pull that up and see if today's gains also match up. And remember, there are talks of how LIC could be preparing a bailout package for the ILNFS group, and so all these stocks were a buzz in yesterday's session. Gujarat Alkalis is up 3%, and so is Syndicate Bank. Amongst some of the losers, you've got the likes of a Bata, Motherson Sumi. These are the stocks which are seeing some pain points, but more of a flavor on the positive side this morning.
Yeah, well, the start off is okay. Let's wait and watch what happens during the course of the day. Opening thoughts, Hadrien, Mendonca, how are you approaching trade on open as well? Because the markets have started off very, very flat. What would you do on any of the key indices if you would do anything?
Yeah, so the strategy definitely would be, a sell on rise because the short-term trend, as I've already discussed, has turned around and we are seeing low top, low bottom formation. So in fact, a flat to a positive start on the markets would be a good opportunity for short sellers to use that flat to positive start to go ahead and short sell. So I would be on a short side, and I'm expecting, markets to slightly and gradually start losing strength as we go ahead.
Gaurav, Bissa, where exactly are you placing a very critical support for the index, a breach of which could see a free fall?
That would be around levels of 11,340, 350 on the spot levels in Nifty. As long as we are trading above those levels, I would not be too bearish. Mildly bullish is what I would be. Not aggressive, but yes, I would play for a small bounce back. Any close or any trade below 11,340 would mean the pressure of at least 150 200 points can be seen.
Okay. Gentlemen, interesting. Just by the way, just a point to mention, somehow some of the pharma names seem to be doing okay today. Reddy's and Sun Pharma I can definitely see, and a Lupin too. The management of it spoke to us yesterday and said that FY20 would be a better year, is also up about 0.5%. So pharma seems to be doing okay for itself. Take a moment to, of course, thank Gaurav, Bissa as well as Hadrien Mendonca for joining us today and giving us your thoughts. Really appreciate your time, gentlemen. Gaurang, a large cap pharma, are you buying anything?
Well, we've been buying for the last 1.5 to 2 years, Neeraj, to be very frank, when nobody wanted to touch Indian IT and pharma. We remained extremely positive then, we remain positive now. The only thing is bad news on one pharma company and the entire pharma sector goes into the ICU. So if you are willing to leave the short-term, medium-term jerks that may thrown at you by the pharma sector, we like Aurobindo, Natco, Alembic Pharma, Cipla, Glenmark, Ipca Laboratories, Cadila, Lupin, and Lupin, Dr. Reddy's and Sun Pharma. So I think that almost covers the entire universe in terms of the Indian pharma and diversified, service providers as well. So we remain positive. The only problem is that your horizon should be at least, 24 months plus to make a decent return on your investments.
You previously mentioned that you're liking a few stocks in the oil and gas space. What else is making your list?
So, Devina, we are extremely positive on all the three oil marketing companies, including upstream companies, ONGC, Oil India, GAIL, again, Reliance Industries included in that. And I think almost about 3 or 4 weeks back, we had the Honorable Minister from the Oil, Mr. Dharmendra Pradhan, speaking about revising the NELP policy that was there because it is extremely unviable given the framework within which that NELP policy was framed. Now, if you have to go and explore the natural reserves in the eastern India, then the terrain is extremely difficult and you need players to come and actually be an active part over there. And under the existing policy, it was unviable. So they, serious changes have been made. About 4 or 5 major changes have been made in the NELP. And our sense is that as you see the government wanting to bring down the dependency of India as far as, energy requirement is concerned in form of petrol, diesel, kerosene and LPG, all these companies will tend to benefit, including a company like L&T, which is quite active into hydrocarbon business. So we remain extremely positive with a 3-year, 4-year plus time horizon on upstream companies as well.
Are you tracking what's happening to a DEN networks through a Hathway cables? I mean, Hathway from lows of about 15 and a half has come to 27 odd. DEN networks last few days has seen a significant up move. What's causing these stocks, to trigger on the upside?
Well, honestly, Levin, I haven't looked at it, so difficult for me to comment, and the regulation also doesn't permit me to comment on companies which we don't have coverage on.
All right, not an issue. The other thing is, you spoke about oil and gas, but do you feel that in general commodities, even for that matter metals, within metals, ferrous, non-ferrous, there could be some opportunities there as well?
Multiple opportunities, in fact, both metals and if you want to even cement over there. And not long ago, I think you had the cement index trading at a 52-week low. So we have close to about 8-9 companies in the cement universe. In the metal, extremely positive as far as the domestic consumption uptake is concerned. And we very recently saw the flat and the long product prices getting revised upwards. So we like Tata Steel, Hindalco, Vedanta, JSW Steel, GSPL, SAIL and Nalco. And my sense is that, as we go forward, numbers might look very interesting and that might translate into earnings visibility. And that will reward long-term investors. In cement also, I think in mid-cap first, Ramco, JK Lakshmi, India Cement, Dalmia Bharat, Shree Cement, followed by big boys, ACC, Ultratech, Abuja.
All right. One more pocket to focus on is what's been happening in the FMCG space. We've been talking about how stretched valuations have been out there. But over the recent past and the last few trading sessions, you have seen, a correction coming into quite a number of stocks from within the FMCG space. So just to highlight for you the kind of PED rating that some of these stocks have seen from the 1st of August. So on the 1st of August, Britannia was trading with a P multiple of 63.7. The stock since then has been down closer to 7%, which is derated its P multiple to about 58.5. For an HUL, we've come down from a 60.6 on the 1st of August to 55.3, a price correction again of closer to about 7.5% on the stock. Not so much so for Godrej Consumer Products. The stock has though declined about 3%, but the P multiple has not changed significantly. The divergent move that we are seeing actually in terms of a P re-rating on the upside is one for Dabur, because Dabur is the only one amongst the stronger FMCG names that has actually seen an increase of 6% from the 1st of August, 6.5%, and the P multiple out there on the 1st of August was 48.5, and from there it's actually gone up to about 50.3. The others, Marico, Colgate, ITC somewhat stays perched there only. It's a stronger name there. A lot of brokerage calls talking about a potential upside on ITC to the tune of almost 15%. The stock has not given you a breakdown in terms of pricing action, just about 1.5% cut. So there's not much of a change in terms of its PE. But the likes of a Colgate, a Marico, they've seen some bout of dips coming in on the valuation side as well. But interesting to see what Dabur does, because it's a clear winner in the pack in terms of the P multiples getting moved on the upside and the pricing action on the upside, while the rest of the pack starts to correct.
Should be interesting times for all of these names as well. For HUL, some bit of correction, Dabur, some bit of an uptick out there. Take a moment, Gaurang, to thank you, of course, for joining in today and giving us your thoughts. Really appreciate your time and your stock recommendations as well.
Thank you very much. Thank you.
Well, that's the view from Gaurang Shah of Geojit. Well, watch out for FMCG, watch out for oil and gas, watch out for IT. There's a bit of a pullback today into some of these names. Let's wait and watch what happens there. Talk about all of that with Nischal Maheswari. He's joining us in just moments from now to talk about his thoughts as well on a whole host of these issues, as the markets, of course, about 0.25% higher, and the Nifty Bank to recovering a little bit of lost ground. It was down about 0.24, 0.25%, is now up about 50 odd points. So there's a bit of an uptick that is coming in the Nifty Bank as well. So selectively, almost all of the heavyweights seem to be doing okay. Nischal Maheswari, CEO at Centrum Broking, joins us right now on the show with his thoughts. Nischal, good having you. Thanks much for joining in. And for the first time on Bloomberg Quint in your new role, good having you. What's the central thesis at Centrum currently when you're talking to clients? Are you telling them to bide the time because of the uncertainties coming up due to the political situation or otherwise? Or is it a good time as any to go out and deploy money?
So I think there is two-pronged strategy which we are suggesting to the clients. One is obviously given that there is a macro challenge. I think people need to be a bit cognizant of the fact about the growing visibility of problems, especially on the macro front. So they need to be a bit more defensive in their outlook. So we are suggesting that you shift on to a more defensive portfolio. So we are saying that get into FMCG stocks, get into stocks which are held by the falling rupee, so IT and pharma. So, and they are by nature also more defensive than the banks and all. So I think that is one thing which we are telling. The second one we are telling is about the incremental economy getting better and better. And that we are saying that you should play it through the mid caps. given that there is benefits of the GST which we are seeing on the ground coming through. Demon has gone behind basically, and the mid caps which had actually taken a beating because of the Demon. I think most of these things are now actually getting behind the corner, and you have seen last quarter results being very good. Again, we are expecting another good quarter around the corner. Mid caps have corrected quite a bit. So I think these two-pronged strategy is what we are suggesting people to do.
Nischal, good morning to you. Devina here. Just want your perspective in terms of the near-term volatility within the markets. Do you believe that will probably heighten from here? Because we're awaiting a lot of news flow globally as well. We've got central banks like the Fed, RBI, and what they do in terms of the policy decisions, what's been happening in terms of the tariff wars, the emerging market meltdown, the currency sell-off for emerging markets. So do you expect this volatility to probably last till the end of the year? And also then you add into the mix, the elections and what the government has been trying to do with its recent announcements and issues in the sugar space. Now this merger in the public sector banks, their 5-point plan to tackle CAD.
So I think you have said it very rightly, Devina, saying that there is going to be volatility, and I think that volatility is not going to end by the end of the year, but it's going to continue till the next new government is formed in the center. And I think this is another 2 to 3 quarters this is going to continue, because besides what's happening globally, I think there are 4 states which are going for election in the month of November. And that is going to put a much of speculation, saying that as the news come out on various polls, who's going to win and all, and I think that's going to impact the sentiment of the market. So that's why we are suggesting that you be defensive in your outlook. Look at sectors basically which is more consumption oriented. So domestically FMCG or the falling rupee helps you in going over the tide. So I think for the next 6 to 9 months, I think it's better to be in defensives or just keep cash and keep on looking out for good valuation. So I think, and I'm very sure basically most of the valuations you will get in this next 9 months of volatile market.
Interesting. Nischal, speaking of that, some of the blue chip names have started seeing a bit of a pullback. I mean, we were just looking at yesterday what the HDFC family has been up to. We've seen some of the consumption names come off as well. There has been a correction, nowhere making them cheap, but a correction nevertheless, both time-wise and price-wise. Would you reckon when you're saying that over the next 6 to 9 months you will get enough and more names, quality names at a better valuation, would these companies tend to fall more? Large retail-facing private banks or some of the life insurance companies or the AMC names? Do you think that there is more correction in store?
So you've seen already most of the insurance companies are down by anywhere between 10 to 20%. HDFC Life, I think because of a change in management, whatever the news may be, I think we've seen 20% down from the top. So I think you will keep on getting these kind of changes happening basically. What you need to do is basically in the next 6 to 9 months, just keep your own price target, and I believe that most of the targets you will get it. Now, specific stocks may or may not achieve that thing, but I think if you have a reasonable target in your mind, I think this volatile time of next 6 to 9 months will definitely get you your prices. But at that point, basically, we shouldn't panic and not buy it.
Okay, so just wondering, Nischal, the retail-focused banks, and I know you can't get into a stock-specific discussion, but the retail-focused banks, the Kotaks, HDFCs of the world, would you reckon the price-to-book numbers could see some more corrective moves?
Retail-focused banks, once again, falls into the category of consumption and falls into the category of quality stocks. So they may not correct a whole lot from here, given that money moves in these kind of times basically into more defensive sectors, and retail, though banking is not a defensive sector, but being retail-focused banks, I think they become defensive by nature, and that's why you see that they may not fall a whole lot from here. But a correction, a time correction is what I see happening in the retail-focused bank rather than actually value correction.
All right, Nischal, just the flip side to that discussion on PSU banks. You know, if you see the screen and if you put up 10 of these names on your screen, it's just lit up in today's session behind, on the back of what the government has announced for a Bank of Baroda, Dena Bank and a Vijaya Bank. The point is, inherently, there's nothing that has changed. The pain points for these PSU banks still remain there. But it's just a sentimental change around this announcement that has caused these stocks to react the way they have. Do you see things changing materially for this space?
I don't see any change happening in the next 2 or 3 years, because I think government has to still find home to a lot of these PCA banks. So this kind of issues will continue to happen. Basically, you will see more mergers happening and the healthier banks being palmed off some of these PCA banks, because government has to find home and government has to find capital for these banks. So I don't see a material change happening in the PSU space. Yes, I think one thing which is happening for a long period of time is PSUs continuously losing market share, and that will continue to happen, and the gainers would be the private sector banks and the NBFC space.
Okay, Nischal, just a thought. I mean, there are two spectrums of thought here. One is that if indeed the ruling coalition doesn't do all that well in the elections, it is already priced in, because the market already knows or is going into these elections with the belief that the ruling coalition will not have much success there. If that were not to be the case, would you anticipate a late year rally?
Yes, so I think, let's see, basically, though I do not have much idea on the politics, but what market is at the moment discounting is that there is going to be the NDA coming back in power, but not with the same majority. That's what market is discounting, and if NDA comes with a stronger majority, definitely market is going to rejoice. There would be a good rally happening, given that once again people will expect that the government now back in power would be continuing with the reforms which they have been undertaking in the last 4 or 5 years.
All right, Nischal, Maheswari, we'll leave it at that. Thanks very much for taking out the time and sharing your views with us here on the show. That's Nischal Maheswari at Centrum Broking with his views on the markets and a lot more. For the indices, we're up about 0.2% for the Nifty, still under 11,400, Sensex at 37,646.
Yep, let's take a break on that note. On the other side of the break, some relief in sight for certain thermal power producers in Gujarat, as there's a proposal to revise tariffs under the power purchase agreements. We speak with Praveer Sinha of Tata Power. That's coming up.
Good news, guys. Got a promotion and a damn good raise.
Congrats, beta.
Congrats, मेरी तरफ से भी.
From mama too.
वाह, रेज. अब तो इंश्योरेंस पॉलिसी ले ले.
इंश्योरेंस? कौन सी कंपनी से लूं?
सोचना क्या? चूज वही जिस पर हो पूरा भरोसा.
वीरू, go for convenience. My company is online, quick and simple.
बेटा, but policy समझाएगा कौन?
वेबसाइट पे सब है पापा. I can even call and ask.
क्लेम सेटलमेंट का रेशो क्या है? मेरी कंपनी का 98% से ज्यादा है.
That's good, but आज की generation wants everything online. Easy premium payment options, loan facilities और wide range of products.
अरे पापा दीदी, I will decide. Just send your links now. तुम दोनों भी ना. Same choice. LIC.
LIC trending with times. 62 सालों से हर जनरेशन की पसंद.
Dreamers. They're everywhere. You've met them, been to school with them, worked with them. They didn't seem different. Yet she's the one who surprised everybody. His crazy idea actually worked.
They are no different. They are you. When you take a chance on yourself.
These are the dreamers who found a way to run the engine of the world. These are the entrepreneurs. There is no formula. There is no right place, right time. There are no overnight successes.
But there is toil, there is preparation, and there is tenacity.
There is no end of the road, no obstacle large enough. There's just the vision and the heart that won't give up.
Because Agons of business never stop.
Agons of business never stop. Only on Bloomberg Quint.
I want to talk about how disruptions are coming and how we'll have to weave that into our portfolio, into our investment thesis. Because clearly in this whole world of disruption, there will be few winners, but those winners will make tremendous amount of wealth.
Welcome back. You're with us on IndianOpen on Bloomberg Quint. Tata Power, the country's largest power generation company, has its fingers in a lot of pies, from thermal-based plants to hydroelectric and solar power plants. In fact, it's been running a hydel power plant in Maharashtra since 1915. It's the Mundra UMPP project that's been a pressure point for the company after imported coal got costlier. An existing clause capped their power to pass on to the cost of the buyers as well. There's a glimmer of hope now with the high-powered committee recommending a revision in power purchase agreements. So, how do all of these measures stack up, and what do the next 1 year, the next 5 years, or the next 10 years look like for the company? Let's get in the CEO and the managing director of the company, Mr. Praveer Sinha, who joins me right now on the show to talk about all of that. Mr. Sinha, good morning. Thank you so much for joining in. This is Neeraj here. Pleasure talking to you today. Let's first talk about this, the news at hand, and then we talk about the vision that you might have for the company for the next few years. Firstly, this high power committee recommendations. I was a bit confused because one of the measures says that the burden of hardships will have to be borne by all stakeholders, but losses incurred thus far will not be compensated. At the same time, there is a measure that speaks about how banks will have to take a haircut of about 8,000 to 9,000 crores. Can you just explain how will all of this shape up and how will it impact Tata Power?
Good morning, Neeraj. Thank you for having me for this show. As you rightly said, Tata Power is 100 years old and it is the largest integrated power company in the country. As far as this high power committee is concerned, the report is still not out, and I would not be able to say what the final recommendation would come out of the report. So we need to wait for the final report to come. But what I can only share with you is that we did have interactions with the high power committee, and I think what they are trying to do is a balancing act whereby they are trying to get all the stakeholders to put together their mind and come up with a solution which becomes acceptable to everyone. So they had huge number of interactions with us. They also had huge number of interactions with the beneficiary states. They had interactions with other experts in the field, also consumer groups, and they are definitely making a sincere effort that this is a great plant, produces one of the lowest cost power, and it should be scheduled always, but it has certain challenges which we cannot ignore. And I'm sure that everyone's wisdom will be considered when they take a final decision on what would be a good way to resolve this and thereby make this project sustainable. So I think in all there is a genuine desire, and I think we should just wait for the final report to come. and then get into the fine print of that.
When do you reckon this would happen, Mr. Sinha? Is it a time-bound thing or is it dependent upon a couple of contingencies?
I think next 1 week to 10 days we expect the report, because the deliberations have been done, and I think they are in the process of finalizing the report, and I definitely expect that within this month I think we should be having the report.
Interesting. Now, and just a follow-up to this whole matter, or rather this matter that is probably concerning a few other companies as well who have some exposure in Indonesia and taking the coal from there. This change in clause, well, we obviously know that's it's a negative for you in the case of CGPL as well. It turns out to be a small negative. How do you think the situation will get resolved if indeed both of these dimensions stay in place? Because you, for example, CGPL can't use 100% domestic coal. The plants, I don't think, or the machinery is equipped for that. At the same time, the law in Indonesia, I reckon, will not change.
Absolutely right. And let me tell you that first is technically it is not possible to use 100% domestic coal. You can do a certain amount of blending. Secondly, even economically it is not viable to use Indian coal, because the transportation cost and the effective calorific value that you get of the Indian coal is much lower than what is of the imported coal, and thereby imported coal continues to be a much better choice for this location. And considering that we are still going to be very, very competitive in this plant, I think it is in the interest of all the beneficiary states to come up with a solution which becomes acceptable. And I'm sure the very reason that this high-powered committee was set up, and the very reason that all the stakeholders are putting their mind together, is to find a solution. And I think we are very optimistic that some solution will come.
Mr. Sinha,
there is never a perfect solution, but there is a solution which, yeah.
No, Mr. Sinha, just wondering, so I appreciate that we don't want to get into conjecture ahead of this decision coming out in 10 days. I might as well talk to you about this when the verdict does come out. But do you reckon the need of the hour be to revise some tariffs, some PPAs, would that be the most obvious and natural course of action?
I think some solution has to be found out. You have seen some of the plants which were on imported coal had to close down, because this is not sustainable. And even for us, this sort of solution is definitely not sustainable, especially when we are looking at another 20 years of operation of this plant as per the PPA. So I think there is a necessity to see the writing on the wall. There is a necessity to realize the challenges. And I think it is in everyone's interest to see that this plant continues to operate. It is one of the most efficient plants in the country.
Sure.
And there is a demand of power. The beneficiary states require this power. You have seen how in recent times the power costs have gone up, and this trend is not going to change soon.
Okay.
So we will continue to have peaks during summer months, and I think there is a huge quantum of power that is being produced from all the imported coal-based plants. So a solution has to be found in the interest of the country.
Okay, yeah, I mean, okay, let's not dwell too much on this. Let's wait for the verdict to come out, and then we'll probably get a chance to talk more. The other bit, Mr. Sinha, is this, this whole thing about the resolution process that is on, or that will be on at some point of time. I mean, the belief on the street, at least a lot of sell-side analysts seem to believe that a large quantum of capacity is up for grabs. There will be a change in ownership that will happen. I think the numbers are at least half of the stressed assets might be up for referrals to NCLTs, and some might be resolved quicker than the others. And the stronger hands, like you, like JSW, like Adani, would be the principal beneficiaries. Would you believe that to be the case? Or would you believe in the other argument that because of the nature of the business, which is bound by FSAs, PPAs, etc., a change in ownership will not really make a material difference to the eventual owner?
I think the process that is going on is a very good process and a very transparent process. And when we look at all these projects, so what we need to look at is first of all whether the type of debt it has, is it sustainable or not in the long run. And many of the projects had cost overruns. They are not sustainable because they have very high fixed costs. They also do not have tie-up of PPAs and fuel supply, which again is very, very critical for scheduling the plant and maximizing the output of the plants. And there is also a necessity to have a linkage so that you get coal at a affordable tariff or affordable cost. So it's very important that all these things are tied up. And that is why many of the projects that we looked at, we found that there are challenges. Some of them we have identified. And as you know that through the Resurgent platform, which is along with ICICI Bank and some other foreign investors, we have set up, we have already bid for Prayagraj, and we expect that the whole process will get completed in next 2 weeks' time. We also expect that some more of these plants will come up for restructuring, and there will be an opportunity. But we definitely look at all these plants in a very, very objective manner. We definitely want to see that these plants should have PPA. We also want that these plants should have coal linkage, or coal should be allocated to them from some of the mines. We also look that these plants should have good construction. They should have the supercritical equipments or state-of-the-art equipments. So number of factors needs to be considered when we look at investments like this. And we are very, very careful when we do a due diligence of these projects. And wherever we feel that it makes sense and it is going to create value for us and our shareholders, we would like to take a call and go ahead and bid for them.
And I appreciate that, by the way, and of course, congratulations on that Prayagraj power generation company bid as well through Resurgent, as you said. But my basic question, Mr. Sinha, is that would some of these stressed assets, in order to become attractive to a bidder, need a change in any of the conditions, be it the PPA or the FSS? Because to a lot of people's minds, these assets have become stressed also because of the unviable reasons or the unviable PPAs that they entered into, thinking that the cost of coal will remain constant, so on and so forth. And now it is completely unviable to run the asset. So even for a bidder, unless these norms or these conditions change, it might not be a very attractive proposition.
I think we need to look at each of these proposals on its own merit. It would be very, very wrong to make a general statement. But what is definitely a challenge is that the PPAs have to be relooked, the coal supply arrangement has to be relooked, and also what is the sustainable debt that these projects can take care. Many of the plants have huge cost. They are over leveraged, and I don't think they will be in a position to meet their obligations to their lenders. So until and unless there is a refinancing that is done and the cost becomes affordable, it would be very difficult for them to continue to operate for next 20 or 25 years.
Okay. Would your drive of debt reduction happen simultaneously while you're going out and making these bids for the stressed assets as well? Because you've done some part of it already. The expectation is that your debt reduction will bring down your consolidated interest costs by a significant amount over the next 2 years as well. Would both of these happen parallelly? Can you share some numbers here, sir?
Yeah, definitely. As you would have seen in last few months, we've already started the process of deleveraging our balance sheet. Some of the non-core assets we have sold and the revenues have come for that. We would be using to further improve our debt equity ratio. And as we move forward, we will also be looking at growth opportunities, whether it is through the Resurgent platform where we have only 26% stake, or we will go and do expansion for our own projects, especially in the space for renewable and distribution and transmission. So these are things which happen simultaneously, and good opportunities whenever they come, we will definitely take a punt on them.
But would you believe that the non-core divestment part would now happen only in the next year? Because aside of the things that you've already done, Tata projects, divestment, most people believe is unlikely in FY19.
Yeah, it looks like it will spill over to next year. But then these are work in progress, and it's very difficult sometimes to put a timeline and say we will do it within a certain time period. So, but definitely what we have already done is giving us good results, and we expect some of the divestment that we have done in the defense business, the money will come within this financial year. So this is a planned out process. It is not done on one-day basis, but we expect that the process which has now started will be completing the whole thing in next 2 years' time.
Okay, my last question really, Mr. Sinha, and that is on the renewable business growth. Now, you've obviously making a big splash out there in news and otherwise as well. I was just trying to get a sense as to how do the numbers stack up for you as a company. One of the brokerage notes stated that your renewable ambition is to add another 5 gigawatts over the next 4 to 5 years. The problem that is that the American companies, for example, are grappling with are not really the opportunity on the installation front or the installation costs per se, because those have come down, but the soft costs for them, acquiring customers, designing individual arrays, obtaining local government permits as well. Would that be something that could become a problem for you, which is such a large ambition in this renewable space?
When we look at renewable space, we look at it on 2 dimensions. One is the utility space where we do the bidding process. And again, we are very cautious and conservative in terms of what sort of quotes we need to give. And you have seen that our bids have always been, to that extent, setting a benchmark that what is a viable project in our sense. And we definitely will bid, but we will bid with a lot of care to see that we are getting the type of returns that we expect for our shareholders. The second aspect is that we are looking aggressively for the rooftop solar, and this will cover both the commercial, industrial and the domestic consumers. And again, we are setting up a large dealer network and a retail network and a sales force which will pan out to all the cities, especially the tier 2, tier 3 cities, and we have identified some 100 cities in which we will be going. So there is a clear-cut game plan. We are also looking at working closely with many of the state governments who are coming up with solar pumps, and that project again we will be implementing in many of the states as and when the bidding process comes, wherein we not only supply the pump sets along with the solar system, but also operate them and help them in running over a period of time. We are also working on some unique solutions on microgrids, which possibly in next 6 months to 1 year we will launch. So there are a whole portfolio of solutions that we are looking at renewable. And when we look in totality, we definitely will become about 3 times to 4 times of what we are today in next 5 to 7 years.
And we wish that it's a highly profitable journey as well to that size, Mr. Sinha. But thank you so much for taking the time out and giving us a small glimpse. You know, I would love to talk to you, Mr. Sinha, once the decision is out in the next 8 or 10 days as well. So we look forward to do that too.
Thank you very much, Neeraj, and it will be my pleasure to come back on your show again.
Thank you so much. Well, that's a confident Tata Power about the capacities that they will have both on the thermal side as well as on the renewable side, 3 to 4 times the current size in the renewable space over the course of the next 5 years. Just before we wrap the show though, I must say the markets under a spot of bother despite companies like HUL etc. doing well. Not a spot of bother really, a very flat day and largely led by financials. So you can see an SBI, ICICI Bank, HDFC and Bajaj Finance as amongst the principal losers today. That pocket is leading to a bit of pressure and offsetting the gains that company like the stock like HUL, Asian Paints or a Titan. So essentially what the consumption space is doing is being offset at what's happening to the financial space. Broader markets is all about PSU banks and sugar. But wrap it up on this leg of Indian Open. Thanks so much for watching. Up next is the FNO Show.
Good news, got a promotion and a damn good raise.
Congrats, beta.
वाह, raise? अब तो insurance policy ले ले.
कौन सी कंपनी?